And welcome to the VSA Capital Tech and Transitional Energy Podcast on Thursday, 13th of February. Phil, how are you doing?
I'm very well, Andrew, and good to hear you again. You are back.
Did you miss me whilst I was in South Africa?
Of course I did.
Flash will get you everywhere. Anyway, so I've been away for a while. Actually, I'm not sure how much I've missed. You may want to come up with some things and say I've missed this and that and everything else. But as we come back and sit today, the world's in a pretty chaotic place. I don't know whether, we've obviously had the Chinese with their DeepSeek or whatever it is taking on ChatGPT in the AI world. The tariffs are flying in left, right, and center, which is obviously shuffling up to a certain extent the EV world. The big seven are perhaps coming under a bit of pressure at the moment. So there's quite a lot of what I describe as change going on in our space. For what it's worth, we're also starting to see now more EVs, I think, come ex-tariff down at a price level. We are starting to see things coming down to, quality down to £20,000. I think they will go to £10,000. I've always said that. And I think the range on EVs will extend quite comfortably to 500 miles before we can say Jack Robinson. But yeah, there's a lot of, I said there is a bit of shuffling of the pack. And actually, the other thing I sort of noticed that, we talk about the big seven, how much they performed over the last few years. Actually, over the last couple of years, the big 47 European banks have performed as much as the US tech stocks. There's a bit of sector rotation maybe going on, and maybe it's time to take some money out of US tech. Maybe we're too late for that, I don't know. But actually, my feeling is that maybe it's transitional energy is, after a few years of horrific performance, is going to start performing again. I don't know. That's my instinct. This could be the year of a transitional energy again. What do you think, Phil?
Well, I'm kind of with you. I was at an event last night. I was chatting to someone about this and about transitional energy. I think it's just going to be very, very interesting what happens in the power sector in terms of the demand from data centers and AI and the capital that needs to be invested for, ultimately for power generation, be that the grids, be it, in natural generations such as wind, but quite a potential shift in investment, a different driver for investment, rather than emissions reduction being driven by hard demand.
I did notice you were in a suit yesterday. I assumed it was you were probably going to go to court for a driving conviction or something. But maybe it was a function. Look, I'll tell you what, European gas prices, as we know, are going through the roof at the moment. So this is the opportunity for renewable to say, actually, we're cheaper. Solar wind batteries should be the cheapest form of energy on the planet. Right now in Europe, it should easily be the cheapest. I don't quite understand why that isn't being flagged up at the moment. I know we have this complete idiot, Ed Miliband. I did a straw poll for about 100 clients the other day. If you had to get rid of one Labour cabinet minister, who would you get rid of? And I made it very clear, you can only get rid of one. You can't get rid of them all, because I think most people would like to get rid of them all. But there was no question now that the poll came back with a very unanimous message: get rid of Ed Miliband. Quite what an ex-former leader is doing, running around in the cabinet as a stooge anyway, I don't know. But, transitional energy should be going well. I'll tell you the other thing, I find out it's a little bit of a red herring, but suddenly we seem to be spending a lot of time around the Doncaster area, Phil. It would appear that is the home of small cap hydrogen. So there's a whole load of companies around there involved on this sort of hydrogen space. We're up again there next week, and I think I'm going to somehow see if I can get them all connected together and do a bit of investor evening or something. I had no idea how important Doncaster was. I still don't really know where it is, other than the fact it's on a train line between London and Edinburgh.
Yeah,
Andrew, that's just me being a southerner, isn't it?
I was going to say, lucky I'm not a Yorkshireman. Yeah. You'd be in trouble there, but yes, Yorkshire. So there's a lot of industrial.
If any Yorkshiremen or Yorkshire lasses are listening, I apologise. Yeah. I'm not very good at the old geography, etc. So anyway, yeah, that's where I was going. I mean, obviously, I've been in South Africa. Worth mentioning maybe that the South African grid, probably about, I think it was about 18 months ago or so, allowed private companies to come in and actually feed the grid if they were using renewable energy. It has absolutely boomed. It's now moving up into Namibia, and other African countries are following suit, all about freeing things up. Yes, you also, though, do need a little bit of government intervention to make sure that, we're bringing in caps and floors and things, because that also means that you can then get bankable feasibility studies and that sort of stuff. So, not sure where that ends up, didn't really end up anyway, but it was just I noticed it when I was in South Africa. Anyway, right. Other than that, no, just the sort of the madness continues, isn't it? So we better go. We're probably quite a short one. Let's go to the who's been reporting. See if we can get some interesting news out of that, Phil.
Yeah. Okay. Well, let's look at the UK. And you've talked about sort of the US and Mag Seven and their performance, but a UK stock that really, and one we haven't mentioned before actually, maybe certainly should have done, is RELX. The ticker is RELX, and years ago, this in the market used to be called Reed Elsevier, the publishing house, and many years ago it acquired LexisNexis, the legal information database. But RELX now is all about data and information and analytics, so very much becoming quite a tech company. And they reported full year results. So in terms of their business exposure, it's exposed to risk management, so it's fraud, identity, financial crime, and compliance. Obviously, legal through the LexisNexis database, information database, but scientific, technical, medical information analytics. It's a multinational company, and they're investing. They've been investing quite heavily in AI and AI-related products, which I'll get into. So this one's a very interesting way to get exposure to technology and in the UK, and indeed it's a very profitable business. They've just had full year results. The revenue was up by 7% to 9.4 billion, but the adjusted operating profit was 3.2 billion on a turnover of 9.4 billion, and that was up by 10%. So really strong operating margins for this business, and it drops through to strong cash flow as well. And we'll get on to that. But just looking within its business, their legal turnover was up by 7% to 1.8 billion. In terms of the risk management side, it was up by 8% for the group. But looking at that cash flow on that turnover, free cash flow of £2.1 billion, spent 1.1 billion on dividend, billion on share buybacks, and today it's announced another share buyback over the coming year of 1.5 billion pounds, and it's launching AI products. And this is why AI, there's been lots and lots about generative AI, different models, different ways of doing it, DeepSeek. But at the end of the day, is AI going to be used in practice? And here we are. We've got a company that's certainly implementing it and launching products for AI for the legal profession, for corporate research, for clinicians, and in medical as well. So that's RELX. Really,
Well, I'll tell you the other thing. What annoys me, I get annoyed with these companies that change their names to something so weird and wacky, and you can no longer. We all knew Reed Elsevier. Quite a good name, and you sort of lose track. I mean, I shouldn't have lost track of this one because I tell you what, although it was a bit boring in the first part of the noughties, for about the last 10 years or so, it's been performing like Bilio. It's been a great stock, but I mean, you look at it and you go, "What the hell's already it? What's that?" And they've changed their names to stupid things, which is so annoying. I find nearly as annoying, by the way, as I get really annoyed when your mobile phone. It downloads some software and you come in, you find, oh my god, your whole phone's changed. I don't know if you've noticed, they've just changed the email on your phone now. I don't know if this has happened to you if you've got an Apple phone, but now you've got all these funny icons at the top of, you can have all your mail or important ones, or ones in your basket, or ones you need to look at, or ones that are going to be stressful, or ones that are just from your friends. Why can't they just leave things bloody alone and keep them as they are? Really bloody annoys me. There you go.
I think it's good you got that off your chest, and it's a good point, well made. But also, I would say don't use a changing company name as a reason not to invest.
Well, all right.
But you've got to.
And also, I mean, as you say, they're using AI. I have to say that I have ChatGPT on my computer. I also have it on my mobile phone, and I've been using it for all sorts of things recently. It's so useful because it just takes what used to take time, and it all happens really quickly now. So as most people know, I'm a big fan. Anyway, moving on.
Yeah. Okay. So that was that was RELX. This is one we have talked about before, and this is Porvair. Ticker is PORV. Market cap £337 million, and they specialise in filtration technologies. And these are, I mean, their tech is used across aerospace, industrial applications, and it is filtration, so naturally it's being used in laboratories and also environmental applications. 4,000 products, 15,000 customers. It's an international business. They had results. Shares are up by, I was just looking at this, 11% in the last 12 months, I think, Andrew, but they reported their full year to November. Revenue's up by 9% to £193 million. That's dropping through to profits. Operating profit up by 8% to just under £23 million. And the earnings are up by 3%. It's got closing cash of 13.7 million, and this is despite investing 15.3 million. So another strongly cash generating business, Porvair. But I was going through these results, and just to highlight, and I know we've got Rolls-Royce coming up towards the end of the month, in aerospace, we'll be looking out for there, as well as its power businesses. But Porvair reported their aerospace and industrial revenues up by 25%. To £84.2 million, and that again dropped through to profits. But interestingly enough, this also has a metals business. It's called Metal Melt, and they produce. This is, I think, it's turbines, but also, here we are. Molten metal. It's aluminium, ductile iron, nickel, cobalt alloys, and they do this in the US. The aerospace is a big market for them. And they reported that the revenues were down during the year, but they had a flood in the US plant, and they've recovered that, and they're expecting stronger demand from aerospace, or a reason to pick up. And also something to note in this company, in Porvair, is that the CEO is retiring, and that there's a new CEO and FD coming in. So potential, let's see what happens there and see what changes ahead for Porvair. But a good set of numbers.
Yeah. Okay.
Right, one that has disappointed today, I think shares down on screen by 10%, is Renishaw. The ticker is RSW. And down 10% today, down 21% in the last 12 months. So what's been happening there? The reported interims, I mean, Renishaw is FTSE 250 stock, 2.4 billion market cap, very long established. They produce the founders of Renishaw originally came out of Rolls-Royce, actually. This is measurement gauges, and the sort of measurement gauges, incredibly accurate, were used in aerospace and automotive to measure component dimensions. They also do gauges that are used in the semiconductor industry to track movements of wafers. And they have, as well, medical equipment, medical device business as well. So, we're looking at industry, engineering, manufacturing, and medical and semiconductors as markets. And they said that their revenues were up by 3.3% to 341 million during the period, and that the pre-tax profits were up by 1.8%. And I think, and it was a bit of a mixed statement from Renishaw, fairly broad guidance. I mean, they're guiding for the full year ending June 30th, pre-tax profit of 105 million to 135 million. That's quite a range compared with 123 million in the prior financial year. They've also highlighted, as many firms are now doing in the UK, costs are going to increase because of the national insurance rise that's coming through in April. However, the CEO did come out and say, look, we are making steady progress in mixed trading conditions, and order intake is improving. So, interesting situation, this one, actually. I mean, it has had a bit of a drop-off today. Might be an interesting time to look at it, but yeah, it's a bit mixed for Renishaw.
All right, it's sitting on the fence there, Phil. Keep going.
Okay, all right. One that we've talked about an awful lot as a cracking momentum, Filtronic, 243 million market cap. We talked about the results last week on the podcast. The company's seen a dramatic increase in revenues and profits, and of course, this is for the business with supplying amplifier technology for SpaceX, and this is the low Earth orbit satellite network, Elon Musk's network, and Filtronic supplying the electronic amplifiers that are used in the ground stations for that. Seen a dramatic increase in orders, profits. Talked last week about it's making investment in its operations, manufacturing operations to meet demand for that. But also, very importantly, it's investing in development of new products, so to build around the SpaceX core. Monday, it announced a further contract with SpaceX, and this time worth £16.8 million spread over 2 years. Obviously, as a result of this, it's confident it will beat revenue and profit guidance, which was probably set last week, over the next 2 years. So further good news there for Filtronic, and the shares have been performing accordingly.
Yep, no, Filtronic's having a great run, I must say. It's very impressive.
Yeah. Okay, hydrogen. ITM Power. The shares
nice contract today. Nice contract today.
Well, I was going to say, yeah, it was, wasn't it? I mean, they've announced this is so they develop electrolyzers that are used to produce hydrogen from electricity, be that renewable energy or otherwise. But yeah, they announced they signed a contract to supply 4 Neptune, what they call Neptune 5 units, electrolyzers. Total contract for 20 megawatts in capacity, and this is with a French energy producer. And I just know it's interesting actually. If you look up the Neptune 5 product, ITM Power, they give the price of it on the website. That's £4.3 million each. So if it's 4 of them, I'm sure maybe it's around £16 million a contract. But if you look at it in context, ITM Power recently had its interims, had revenue of £15.5 million and a loss of 16.8, but it has a lot of cash, 203 million on the balance sheet. So this is, in relative terms, a good sized contract, and at the interims are reported that the backlog, the record backlog was £135 million, up from just under 44 million 2 years ago. So it's pretty good.
And as we said in the intro, some of these little transitional energy stocks like ITM are starting to perform. I mean, the other one, got to give it a shout out. Well done them. Ilika is up 76% so far this year.
Yeah. Mm-hmm.
So, there's another one that's just, so there is, does feel like there's a little more momentum here in some of these stocks. Anyway, that was a slight red herring. Here you go. But well done, Ilika.
Well, as we always say to company, it is all about the news flow. And the markets, despite the criticisms of the UK market, you look at Filtronic, the market does react to real positive events. Gelion,
yeah. Well, I mean, they've had a little bit of a blip up on some news this morning, but as we all know, their last fundraising, unfortunately, was only a couple of £100,000. And, I don't know about sulfur. There's a lot of interesting things with it, but it's very complex, Phil. But anyway, you say what you were going to say.
Well, I was just going to say, you're right. Look, it's sulfur battery technology, but they announced that it was technical progress with developing sulfur cathodes, and they've had their cathode technology tested, and they found it's now viable to be paired with solid state electrolyte material, which is pretty critical, really. Your cathode and anode have to work and interface properly with the electrolyte, so they've had it tested, and yes, it does. So it's development progress for them, but sulfur battery technologies, it's going to go into, it is aimed at aerospace and defence. It's quite focused applications, really. A technology that's still under development, but that was Gelion. Yeah, that's about it from me, Andrew, unless you've got any others that I might have missed.
Not really, no. As I say, obviously I've been away for a few weeks. Actually come back, we're really busy, which is good. So I'll have to leave it there, and maybe I'll have more inspiration next week. But thanks, Phil.
I look forward to chatting then.
This podcast has been produced and edited by VSA Capital. It is intended for information purposes and not as investment advice. The information is intended for recipients who understand the risks associated with equity investments in smaller companies. Please do your own research and do not rely on a single source when making an investment decision. VSA Capital may derive fees from this content and seeks to do business with the companies mentioned.